All right. Hello, everyone, and welcome to our premier and initial webinar. So what we're going to do is we're going to start out with the video, give you a little background on the company and the people involved, and then we'll go through some more of the numbers, and then I'll open it up to questions, and I think that's where most of the meat will probably come out. So we're going to start with the video now. So here it is.
Hi, my name is Rand Taylor. I'm the CEO and co-founder of Fuelox LLC and the Industrial Sustainability Group. We started the company about 8 years ago with a blockbuster product called Fuelox with Combustion Catalyst, a fuel additive designed for gas and diesel that promotes a more thorough combustion, leading to better fuel efficiency, more power, less emissions, and a greater longevity of the components of the engines themselves. In January, we introduced our brand new Infinity Lube line, which is an innovative, 100% plant-based product that is designed to increase lubrication and sustainability by hundreds of percent over what's available today. The Infinity Lube product is absolutely amazing. Not only is it the safest product you can use, but it's also the most effective product you can use, as it far outperforms all the conventional lubricants that are available today. Our products are not only great in reducing emissions or clean up oil spills or reducing the toxicity in the waste product, but also in creating more efficiency, whether it's gasoline efficiency, diesel efficiency, or the longevity of the equipment that it's being used in. The bottom line is that it saves on the bottom line.
This stuff here is the best stuff I've ever used. I've definitely got at least a 0.5 to 1 mile per gallon increase with my tractor trailers. And I also noticed that on the emissions test, we dropped 2 to 3 points on the emissions test over from the year before from using this material. The oil stays cleaner longer. I'm a big proponent of it. If you can use this, you will not go wrong.
My name's Alec Taylor. I'm the Director of Operations and a co-founder here at Industrial Sustainability Group. My job is to increase revenue and bring my customers phenomenal customer service. Last year, we had 5 members of our sales team, and we brought in over $2.5 million in revenue. By 2022, I expect to triple our sales force and do double the revenue that we did last year. We knew we had a special product when we started the company because our fuel additives contain a combustion catalyst. This combustion catalyst gets fuel to burn a little bit earlier and longer. So we save the customer between 7 to 10% on fuel, we increase the power of the engine, and we cut the emissions in half. Our lubricant is very different from other lubricants because it contains a chemical called HDI 2500. What this does is it basically hardens metal as heat and pressure increases. So in other words, the stronger the heat, the stronger the pressure, the stronger your metals are going to become. As an investor, you should invest in this company because we have the best products in the market for sustainability.
Hi, I'm Jessica Schwartz, and I'm the marketing manager here at Industrial Sustainability Group. I oversee most of the online and print advertising here. Currently, we are reaching over 500,000 people nationwide with our online presence, with future plans to start advertising internationally as well.
Here at Wikistone, we use Fuelox fuel additive. Cuts down on our regens, 0.5 miles a gallon increase across the board, and that's including Cats and Detroits. And it's simple, it just works.
The future of ISG is to bring eco-friendly products to market that are usable by the industrial world, that lower emissions and make everything more efficient so that it's not only great for the environment, but it also is effective to the business on a bottom line standpoint.
That's probably the most impressive thing that you'll see right there.
That's amazing.
Yeah. We stopped the wear and everything.
We believe that this is an exciting opportunity because with Infinity Lubes, an opportunity to follow up on a tremendous product with Fuelox with combustion catalyst that we can use as a springboard into other green products that we can also sell to the industrial world. We are looking to raise between $1 million and $5 million in this round, but with an eye on a Reg A offering sometime at the end of the year or early in the first quarter of 2022 to go completely public.
Okay, so now we're going to go through the slides that give a little more background as to where we actually make our money and where we plan to make it in the future. So here we go, getting started right now. Okay, so how do I do it? How do I move? Okay, gotcha. All right, so our mission, as you can see, is to supply our customers with, with great products that are environmentally friendly. But the big thing is that so many eco-friendly products that have been brought to market in the last 10 or 15 years, people generally speaking know that when they buy something that's good for the environment and quote green, quite often they're compromising on the strength and the effectiveness of the product. And frankly, that's not something that we're willing to abide by and take for granted. We think that there's plenty of great green products out there that are also super strong. And that's really where our focus is looking at fantastic green products that are also incredibly efficient and effective. The biggest, the two things we're looking at right now, obviously we're looking at our fuel additive and also the lubricants. So we will move into other areas, but right now the two biggest problems that we're looking to address are combustion engines and cutting down emissions and making them more efficient. And also with lubricants, bringing on lubricants that not only provide more protection to the metal, but which are also less toxic and better for the environment. So those are the two areas that we're really focused in right now. We expect that as time goes on, we will branch out from here. But quite honestly, we got our hands full with these areas right now, as you'll see when we start to talk about the potentials. The trends that we're looking at here for all the sustainability in particular, is that, as you can see, we all know everyone's becoming much more aware of the importance of keeping our environment clean and how important it is that not just, and I think it's going to go way beyond just the air. Most of us have been taught that, air pollution is really, and climate, greenhouse gases and all that is bad. And we know that. But it really goes way beyond that. One of the big issues out there that we don't talk about, and we will in the future, I guarantee you, are heavy metals. Okay. And heavy metals are also part of emissions. Okay. So that's a big issue, at least for us, in the things that we're bringing on board. We want to make sure not only do they reduce emissions, the CO2s and the NOxes and so forth, and the sulfur dioxides and that kind of thing, but also they're low on heavy metals, and they're also the general toxicity is much lower. One of the big issues that people don't understand is that used engine oil is extremely toxic, and one gallon of it can actually ruin over 1 million gallons of groundwater. So that's and most of that comes from the metalware and the mollies and other LOAs that are in the oil itself. So and the last thing is that you can see all the companies that are starting to do it now. 10,000 companies worldwide report a detailed climate impact information. well, the bottom line is that number is getting bigger and bigger all the time. And all you need to do is look at the major companies around the country that now have SGA departments, or ESG departments, where it's all about environmental, sustainability. That's only going to grow bigger and bigger, and we are going to be a part of that. Our solutions, our lubes are plant-based, with the exception of the lithium part of the grease, of course, which is not. But the liquid friction eliminator is 100% plant-based, and that's really the main part of our lubricants. And that is infused into the grease and is also mixed in with the spray, which is mixed in with another eco plant-based product as well. So that's what we're doing with Infinity Lubes. And the Fuelox itself, while it is not a green product per se, its effect is one that is good for the environment, because as long as we're burning fossil fuels, which we can argue all day long how long that's going to take, but for the foreseeable future, fossil fuels are here, and we're going to do our best to make them as palatable as possible for the environment. So we reduce the emissions and give better fuel efficiency for all the engines that are using it, as well as having the engines last longer themselves, because the components will be cleaner and lubricated and will last longer. The market opportunity for the worldwide for both of them, as well, as you can see, is combined. It's almost $150 billion. And of course we know that's only going to grow as well. So there's a massive market out there, and as you can see, the 124 billion projected for the lubricant market was a major reason why we got involved in it. It gives us diversification, obviously, from a product standpoint, but that's a big reason why, is because lubricants, even in the EV market, EV, they're not going to use fuel additives, but they all need lubricants, and lubricants are used in everything. Here's some of the industries we serve. The usual, you would think of trucking, heavy equipment, work boats, marine, mining, transportation, heating oil, and basically anybody that uses fuel, and quite now anybody who uses lubricants. Most of our business is done direct to other businesses right now. We do have our online platforms, meaning our own website, as well as we're online with Amazon and Walmart online. I think we're on eBay. I don't know where eBay and a couple others. But the truth of the matter is that that's also growing too. That's, as a matter of fact, the growth on that is while it doesn't really compare with our business to business stuff, it has grown dramatically, and it's growing, pretty much organically as well. A lot, which is nice, because it means our brand is growing, which it definitely is. We're also looking to distributors and a wholesale distribution. This is probably our biggest area of growth going forward. We can talk more about this if you want to ask me questions about this, but to give you an example, we just came to an agreement this morning with one of the largest fuel distribution companies in the country, actually. So we're really excited to work with them. We'll be probably making an announcement about that sometime here in the next couple of weeks. But after a month or two of meet and greet negotiations and getting used to our products, they're really excited about carrying a catalyst, a powerful catalyst, and that they can give to their clients. Most of them heavy equipment, construction, drilling, and that kind of client, that they know is going to help them be more efficient, reduce their regens on their tier 4 engines, and reduce their emissions. I know I just said that. So anyway, bottom line is that it is, this is a direction we're moving into. We're also talking to distributors overseas. So we have a number of distribution agreements that we've entered into in the last few months. One of them right now we're talking to give you a little bit of flavor, is in Europe, in Eastern Europe, and we are talking to a number of companies over there. But right now, we're pretty deep with a company that has 2,600 gas stations / truck stops, and that's only going to probably grow more because the company that introduced us to them is starting to introduce us to other people as well. As you know, as you may not know, but Europe actually is a real hotbed for the whole green movement, and they're quite a bit further down the road than we are here in the United States, and they really love what the FuelOx brings to them from a fuel additive standpoint. And the reason why you hear me talking about the fuel additive is because the lubricants themselves, we haven't really marketed as much because we've only had them for a few months now. Meanwhile, most of these deals we've been working on for the last year or two. So, and it's all been fuel additive centric. But the good thing is that all these guys that love the fuel additive, they already all love the lubricants as well, because if you're loving the fuel additive for the green side of it, and you're going to love the lubricants 10 times more. That's the way we look at it, and that's what we're starting to see too. The retail sales, the brick and mortar stuff, we do have some conversations going on there with a couple of the bigger retail outlets here in the United States. So that will be something for us going forward as well. And between these four, we have our hands full right now. We're actually working, are looking and interviewing co-packers and other places that we can expand our production going forward. And because we recognize that our 6,000 square foot building we have now, that we've had for 2 years, we're pretty much outgrowing. Good problem to have, but in the meantime, that gives you an idea of where we're headed. Our sales strategy, we do a lot of digital, a lot of work on the internet, a lot of advertising on the internet. We have guys who and ladies who work on the phones, and direct sales, cold calls. Not a lot of cold calls. Most of our stuff is warm and it's been generated online or through referrals. And then we do some selective print media advertising. We don't do a lot. Trade shows, we're selective about our trade shows, but we're very active in the trade shows. Give you an example. Last weekend, we were in Houston at the Offshore Technology Conference. Phenomenal show for us. Even though it was half the size it normally is, of course, coming off of COVID, it was still a great show for us. We came away with about 75 fantastic leads. And we actually had one company in particular out of Oklahoma City who saw our demonstration and had their field maintenance supervisor drive down the next day so he could see it himself. It was pretty amazing. But in the meantime, the response was off the charts, and we got some amazing opportunities that stemmed out of that. You'll hear more about some of them because a couple of them we're actually finalizing on a more formal basis. And but meanwhile, we're going to go to this September is absolutely crazy for us, because not only do we have a couple of these local boat shows, the Newport show and the Annapolis show, and I think there's another one in Connecticut. But we also have the Nephi conference, which is heating oil for the whole Northeast, of which we supply about 700 heating oil companies right now with heating oil additive. Not a huge part of our business, but a really solid and growing one. And it's a fantastic little niche, business that comes around, for 3 or 4 months a year, and we do really well with it, and our products are fantastic. So we have that conference, but in the meantime, we're in Vegas in the middle of September at the International Mining Conference, Mining Expo. It's every 4-year event. It's a massive event. I can't wait. We were waitlisted 4 years ago. We got in this time. We're excited about that. We're also going to be at a conference in Indianapolis for the what's it called?
Yeah.
The Impact Show. So the Impact Show is for trade show for truck stops and convenience stores. We've gone there a few times. It's been a really good show for us. We're also going to the utility show in Louisville, which is all utility trucks and heavy equipment. It should be a great show for us. It's our first time going to that. But the bottom line is, then we end up, I should say, at the just before Thanksgiving, we're at the Workboat Show in New Orleans. So these are all great markets for us that we're really starting to get into. And and it's interesting too, because all these shows, these guys had interest in our product 2 years ago, 3 years ago, because for the fuel saving aspect of it. But now all these guys are interested in it, not just for the fuel saving, but for the emission side, because now there's tier 4 on everything. Okay, whereas the tier 4 was pretty much, just the over the road guys for many years there, from 2008 till about 2018 or so. That's mostly what it was. Now it's pretty much everywhere. They've got it on farm equipment. They've got it on tugboats. It's everywhere, So it's exciting for us, but we do a lot of trade shows. I know I was a little long-winded there, so sorry about that. One of the things that we're looking to do also is we're looking for new products that we can either acquire the product themselves or the companies that make the products. So that is one of the reasons why we're looking. We're also looking to eventually be traded on a public basis. I'll talk more a little bit about that later. We've been around for almost 8 years now, and we started the company, myself and my son Alec, on our kitchen table. Long story short, a friend of mine came to me who's been there. They've been selling fuel additives to the military and a couple other big companies, but very on a relatively small basis. And it's his family's business. Told me how great the fuel additive was and how he wanted to start. He was going to get involved with the company and wanted to start selling it to the general public, and what a great opportunity this was, and I should help him do this. I didn't realize he'd talked to 25 other friends and asked them the same thing. All of them told him to get lost. I told him that I'm really not that interested, but send me product. And he sent me some product. I gave it to some friends of mine who have trucking companies. They loved it. And basically that's how we got involved in the company. We started making it in little tiny bottles that we were giving away, just asking, almost begging people to try. And it grew from that to this last year. We did about 2.5 million in revenue. And right now we're up about 35-40% over that, this year. So it was a good thing for us to do, but it didn't come naturally and easily. But we're glad we did it. So that's a short version of how Fuelox got started. As you can see, that's my son Alec, director of operations, and Jessica Schwartz is our marketing manager, who handles all the really everything that has to do with advertising as well as marketing. She does everything. She's awesome. She'll everything to do from online to brochures to stickers for pumps at the marina. She handles it all. And then Joel's our strategic advisor, who's walking us through this process of raising capital and eventually being publicly traded. The revenue, as you can see, the growth over the time. The big thing on the projections is that give you an example of almost everything from 2016 to 21 is I would refer to as organic. Literally just selling. Most of it we were looking at our five biggest customers. If you put them together, make up under 20% of our revenue. And so the vast majority of our revenue right now is made up of, mom and pops, small businesses, and which is the downside of that is that we're the big guys. The upside of that is that's what allows us to turn the lights on every day. And that's what allows us to bring in the bigger deals, which is what we're starting to do now. The truth of the matter is that to go from 3.5 to 30 million, anyone who's been around any kind of, understands, big contracts and big users, when it comes to lubricants and fuel, it doesn't take a huge number of big deals to hit that 30 million mark. Is it going to be easy? No, nothing's easy. Okay. Do we have the groundwork laid for that? Absolutely. We're between the things we're doing overseas and the companies we're talking to now, the companies we've just come to agreements with. We're very confident that growth that you see projected on the right-hand side of the screen can be attained. And quite honestly, I've always been of the belief that you're better off under promising and over performing. And I think that we can actually do that. So, but in the meantime, that's where that's going to come from. And the money we're raising now is going to fuel that, because of the $1 million we're raising now, we're looking to spend over half of that in marketing and attaining more business. So as you can see right there, 600,000 we've earmarked for sales and marketing. 200,000 we're going to put aside for legal and auditing and things like that we have to do to go public. We're going to have 180,000 working capital and about $90,000 for to take care of the expenses in raising this capital. So as I kind of touched on before, the reasons why we want to go public is to get growth capital. That's the biggest thing, as well as being able to recruit better talent and to make some strategic acquisitions. We already have a couple companies that we're looking at right now that we may actually make an offer on after we do this deal. That would be very, very accretive and to our business in every way you could think of. But the whole idea is to build this company, and obviously we're all shareholders, and that's the game plan, is to make it a real value for all the shareholders, and build it to the point where we can all make some money and have a nice liquidity event somewhere along the way, if not a number of them. There we go. That's it. So help Jess. So yeah, Jessica's helping me with it. So okay, so the format's open. The floor is open, I should say, to you guys. Anybody have any questions? By all means. Do we have anything here? You can chat, or you can hit the Q&A button on the bottom, or you can raise your hand, I'm being told. In the meantime, okay. Oh, no, there's as far as rewarding shareholders with dividends, it's not something that growth companies generally do. But am I opposed to it? No, I'm not. I'm not opposed to it at all. But again, it isn't something that companies who are based on, that we're really looking to see. Part of the problem is, and I'll just throw this out there right now, is that young companies who are focused on growth generally need all their capital, and dividends means that you're giving away your capital. So not something I'm thinking about right away, but am I opposed to it? No, I guess the answer is no. Well, I can tell you this, that we are, as far as companies that would complement our current business, we are looking at right now, other fuel additive companies that are very niche oriented, and are not, are usually, and this is just an example of at the moment, there could be others that pop up. There's all kinds of companies that make really neat products that particularly would be a nice add-on to the Fuelox and the Infinity Lubes. So it's more of it's a combination, I guess, of we're looking at we want the opportunity to have the liquidity to be able to buy companies as they become available. But in this particular case, we are looking at a couple of niche fuel additive companies that would not compete with Fuelox, and would be an interesting and a really probably, and it would have to be the right kind of deal that it brings nice cash flow to the bottom line. But when you're talking about buying private companies, that's the beauty of buying a private company, is that you can usually get a private company for anywhere from 2.5 to 3.5 or 4 times the cash flow, as opposed to a publicly traded company, is usually somewhere between 5 and 10, if not, and that's not counting the stratospheric PEs that you see, amongst the high flyers. We're talking about just, run of the mill public companies. But in the meantime, the value is, as a public company, is to buy private companies. And when we're public, we'll have that capital to have the ability to do that. Michael or Scott, any questions? Or Adam's asking all the questions here. No. We're actually we're pretty excited about this whole process. It's a little bit, obviously it's a little bit unusual for us. We've never been through it before. Although I did work for in a previous life, I worked for a trading house that traded stocks. I did that for about 16 years, and ran an equity desk. So I dealt with a lot of guys that were publicly traded or wanted to go publicly traded, or companies that were publicly traded. But this is a new experience for me doing this with our company, and we're excited about it. So it's pretty fun, But in the meantime, we're really excited about the opportunities that we have. I mentioned that we're doing some things in Europe. We actually just finished doing a big test with a company called IAMGOLD, who is, I think they're on the American, but IAMGOLD, publicly traded. I know they're traded in Toronto as well. Gold company. We just got done doing a test with them in Burkina Faso, in a mine there that they burn over 1 million gallons of fuel a month. And we tested on 2 150-ton haul trucks. I think they're the Cat C865s, if I remember correctly. But the tires are 12 feet tall, and we got them 9% better fuel efficiency on their haul trucks, and we got them about 32% better fuel efficiency on one of their D9 Cat dozers. That 32%, as I told them, that's not coming from our fuel catalyst. We're usually good for somewhere between 5 and 10% with the catalyst. But what we also did was we cleaned out a situation where they clearly had fouled injectors and so forth that cleaned out, that allowed it to run much more efficiently. But that's the kind of thing, as I told them, unless you're treating your fuel with our product, you will have the carbon buildup and you will have the fouled injector situations that'll happen without you ever knowing them, unless you do what we did, which was clean it all out, and all of a sudden your efficiency jumps through the roof. All right, Colin, I'm sorry. So we got a question here. Help me, Jesse. Oh, okay. So the EPA doesn't endorse. The EPA files and records. Yes, where our fuel ox with fuel additive is on the. If you go to the EPA site and you look for, I think it's actually the fuel ox. If you look there, it is there, as well as a couple of our other products. So yeah, endorsements, generally speaking, there's some big companies will endorse fuel additives. There's usually some sort of financial agreement there between the two of them, and it's not something we've ever done. We've really built our company so far on its pure laurels of competition against the other fuel additives out there. The interesting thing is that we have hundreds of tests, and a lot of them we've done right against other additives. And the bottom line is, if you have an additive that doesn't have a fuel catalyst, then there's no way it's going to be able to compete against us. It just isn't. And that really, it eliminates almost everything you see on the shelf in any truck stop, or even in most big heavy industries. These guys aren't using fuel additives that have a catalyst in it. Okay, because generally speaking, it's much more expensive, and the technology is way beyond everything else out there. So, but the fuel catalyst, our fuel catalyst, the difference between us and everybody else is that the cetane improver is not the same as a fuel catalyst. So while a cetane improver will help burn a little bit better and get an earlier ignition, our fuel catalyst, actually diesel combusts around 900 degrees, we get to combust around 600. And by doing that, you end up with a more thorough burn. So you burn more of the fuel, slightly longer combustion, which means you get more power and better fuel efficiency, but also we reduce the emissions on everything, including the NOx emissions. So which is unusual, because usually there's an inverse relationship between soot and NOx. The less soot you have, the more NOx you have. We're actually able to reduce both of them. Okay. How do you buy in again? Yeah, you go through WeFunder, and it's just that we're right now what we did is we used the first $200,000 of investment is at a 20% discount. And right now, so last I looked, there was about $40,000 left of that. That is at the discount. After that, it'll go to $2 a share. It's $1.60 a share right now. And then when it goes public, I have no idea what price. Generally speaking, though, if it's going to go public, it's going to go public at a higher price. Okay, that's usually the way it works. I can't, I think there's a million reasons why I can't tell you that's the way it'll work, but most of them regulatory. But I think that generally speaking, that's usually the way it does work. Does that answer your question? Awesome. Yeah. So the best thing to do is just go to the website, go to the WeFunder site, and like I said, there's about 40 grand left of the discounted stock.
I'm gonna follow up this.
I'm sorry.
I'm gonna follow up this with an email to everybody.
Okay. So Jess is going to follow up with an email to all you guys, so you can see that then too. Anything else? Small group here, guys. I'll answer anything I can, All righty. Well, I appreciate you guys coming. Thank you very much. Appreciate the support. Thank you very much. I really appreciate that. We're going to do this once a week for the next 4 weeks. So if you know anyone else, thank you very much, Scott. If you know anybody else that wants to see this or hear this, I promise you I'll be better next week. First one, hopefully, but it should be better next week. But thank you guys very much, and appreciate your comments, and have a great night. Okay, thanks.